Before you go to sell your business, it might be worthwhile understanding how businesses are bought. If that's of interest to you, that's what this video is about. Hi, my name's Rory McCaw. Welcome to Self-Made Strategy. I'm a serial entrepreneur. I built an IT consulting company started in 2001, exited and sold in 2018, and I am here to share my tips and tricks, experiences, my successes, my failures with you so that you can accomplish more success than I have, hopefully in a shorter amount of time. So let's talk about selling a business. Let's use some very basic numbers. Your numbers might be much larger than this, but we'll use some very basic numbers to get this point across. And the point I'm going to get across is how buyers often finance business purchases. So let's take an example of a business making $200,000 a year in net income. If you find someone interested in buying your business, and they feel that that business is worth 2 times what you make on an annual basis, that tells me they're willing to pay $400,000 for your business. Now, the key here is it may not be $400,000 in cash. You hand over the keys like you would maybe in a real estate transaction or a car purchase transaction, and you walk away. They're probably going to want to lock you in for a duration of time. And what they may suggest is that they'll pay you, say, $133,000 a year over 2 or 3 years, to the point when they get to the 400,000. So they're going to use, in that case, it would probably be more like 3 years, but they would allow themselves the opportunity to use your money. They'd be making the 200,000 a year that you are now making, and they'd be using a majority of those funds to pay you out on an annual basis over a 3-year period. So if you think about 133,000 a year, 2 years is 266, 3 years is 399. You're pretty much at $400,000 right now, and they have used your money to buy you out of your business. And this is a very common practice amongst, say, financial planners, but also many other types of business purchases where they look at the cash flow and the income generated by the business, and they're going to use that to pay you, the current owner, so that they can become the owner. And that means that they don't have to output a great deal of their own money, and they don't have to have a great deal of their own money in order to acquire your business. It may not be the best way to sell your business, but it is one option that's out there. If you like these videos, hit the like and subscribe button.